now being joined by Seth Freeman. He's the Senior Managing Director at Glass Ratner Advisory and Capital Group. Mr. Freeman, very good evening and thanks so much for joining in today. Let me first start off your view essentially on, on what we're seeing essentially with Nvidia earnings coming in. Do you think that all of the conversations about AI being in a bubble are now ratified, or do you still see that that constraint will keep hampering the US market at least every now and then in this particular quarter?
Well, we had quite a seesaw today. The early news was that demand from Nvidia was going to be much lower than originally anticipated. And now we have a very strong performance. I think we're just going to, these stocks are valued so high, and there's quite a bit of competition among the different actual AI providers. But we're just going to continue to see volatility, and they just represent such a big piece of the market right now. We're going to see swings.
Mr. Freeman, with what we've announced yesterday in terms of US as well as allowing the export of chips to Saudi as well as UAE, do you feel that it does give a positive impetus to all of these AI-related stocks, and there is a lot of concentration amongst those? But do you think that it gives them a lot of comfort for the kind of estimates and guidance that Nvidia's management has put out in Q4?
I would doubt that the announcement with Saudi Arabia really moves the needle in terms of the overall view on Nvidia and the other chip makers.
And let me also get your opinion on what you make of the market reaction coming in on post the Fed minutes being released. It seems to be a very, very divided group right now. As of now, assuming that December doesn't have those rate cuts, actually, let me get that perspective first. How do you view the markets in that scenario?
I think the general perception is that there will not be another rate cut, and it's already kind of baked into expectations. I think what's more interesting is as the government catches up on data. Earlier today, they announced that actually our trade deficit was down about 24%. Part of this represents some front running in terms of imports in anticipation of the holidays and so forth. But it may actually be the impact of tariffs.
Just one more question, largely in terms of how we should look at the economic data coming out as well. Which camp do you currently lie in? Is it that the inflation forecast is something that you are leaning towards, or is it the weakening labor market that you see as a larger concern at this point of time?
It's very difficult to adjust inflation as much as the president and other politicians would like to suggest. I do think it's in the labor market. We're seeing quite a few layoffs. I'm deeply in the corporate restructuring turnaround business, and many companies are filing for bankruptcy and laying off workers.
One final question in that sense, because you mentioned that the consensus seems to be that there won't be any kind of rate cuts in the month of December when they next meet. But in terms of the increasing perception, essentially of a lot of people believing that the labor market is weakening, how should one look at the markets in the US? Where do you think that the pockets remain? Because the ones that are continuing to do well are expected to continue to lead the markets, at least in the near term. So in that context, how do you currently see it, and how would you want us to see it as well?
Well, normally, consumers get nervous when reading about layoffs and talking to friends who might have been laid off. And you would expect a reduction in consumption in discretionary goods. And with interest rates sticking high, maybe people are going to put off buying more expensive things like appliances, or even putting off cars. But at the same time, many American consumers are maxed out on their credit cards. So I think what we're going to really see, or what will be impacted, is just sentiment. People are continuing to spend in spite of the fairly negative news.
That's Seth Freeman's view coming in. And Mr. Freeman, thanks so much for joining in this morning. You're very bright and early. And thanks so much for
Thank
giving us
you.
your view across a bunch of topics.